How closely are you watching some of these jobs numbers? How closely are you watching and listening to the Fed?
Watching the jobs numbers very closely, Brian. Uh, I think things are slowing down, like you said, but it's still going to be job growth. And in my opinion, I think the recession is still sometime off in the future. Perhaps not as far off into the future as previously believed. But I'm one of those that says, hey, listen, we're not in a recession right now. The economy is still growing. It's simply slowing down. And we haven't really gotten to the point where the economy is truly contracting when you look at all of the factors.
Yeah, I mean, we can argue over the technical definition of recession. Technically, I guess we are in one. Others would argue we're not. I think we just kind of lose the plot if we get into that. It may be the weirdest economy, Lee, that I've seen, Steve Leisman, others have seen in years, if not decades. And certain companies are posting great earnings and guidance, others not so much. How do you see it right now? It's hard to figure out, at least on my end.
It's extremely hard to figure out. And to your point, if we sat here and really tried to go into it, it'd be like a soothsayer at the county fair and looking into a bowl of noodles to try to divine what's going to happen in the future. But it is, a complicated brew that we've got going on here. You've got different sectors of the economy that's doing well. You've got different people that are doing well. Now, here in Georgia, I was delighted yesterday, candidly, because I filled up my car with gas and it only cost me $60. But that's a whole lot better than $80. So we're getting some relief on that end. But when we talk about what's going on with the Fed, we've got to figure out, hey, listen, you mentioned as you were at the top of the show, that interest rates on mortgages have come down, not back to where they were, but they're down below 5% for the first time. And so that has actually going to have the impact of increasing some activity in the housing market. So you're going to have those things combined. And I think that's going to push the Fed to keep their foot on the gas for a little while longer because the economy isn't going to slow down the way they might like. And it's not going to bring down inflation enough.
And here's what's so bizarre is that the stock market is having a really nice little run. I mean, the NASDAQ's up, 15%? In 30
Absolutely.
days, Lee, but at the same time, the 10-year yield is back under 2.7%, with the bond market sort of indicating that a major slowdown is coming. I'm not sure which one to listen to.
I think it's a function of listening to both. What we're talking about here, in my opinion, is a matter of timing. Things aren't bad all over, right? And so what we're seeing in the stock market, in my opinion, is that, hey, listen, things really aren't so bad. The market's oversold and have gained back some of that overselling, in my opinion. The bond markets tell us, hey, listen, we're not out of the woods and a recession may be yet to come.
Yeah, and what are you advising your clients to do with their equities right now, Lee?
So it depends on the stage. I've had some conversations recently with clients that have new money, so to speak. And over the past month, I absolutely thought this was a good time to get into the equity markets. Again, when you're sitting there and at the time of some of those conversations, depending on what you're looking at, S&P down around 20%, NASDAQ down around 30% or thereabouts, it's a great time. For those who have a long enough time horizon, I still think it's a good time for equities, but be comfortable with the fact, or at least be cognizant of the fact that things are likely to get choppy through the remainder of this year. I do not believe we're going to test the lows back in June, but this run up, I don't think is really the beginning of a complete upcycle. Come September, I would not be surprised at all with a bit of a pullback.